Hi folks, welcome back to another episode of Investment Income for Life. Today I will be discussing some highlights for phrases, logistics and commercial trust. FLCT has been performing badly over the past few months. Its recent unit price has plummeted to below $1 level, and there's a 52 weeks low of 0.975 billion recorded over the past few weeks. Based on its last distribution, the distribution yield for FLCT is around 6.8% to 7%. I guess the million-dollar question will be, how low will FLCT go? This may be the best time to invest into FLCT with a huge potential of 20 to 30% capital appreciation. Okay, let's talk about the weakness facing FLCT. The current high interest rate environment is definitely one of the key components, but this also affects the other real estate investment trusts in Singapore. The main reason for the drop will be number one. As we all know, FLCT is actually a business combination that is made up of the logistics trust and the subsequently acquired commercial office businesses. The Achilles heel for FLCT is thus the commercial office business, which has very low occupancy. As we can see above, the occupancy rate for logistics and industrial sector is 100%, while the commercial office sector is at only 85.0%. One key concern here is price commercial asset, Alexandra Technopark, whose occupancy has dropped from over 95% to 78.5% as at 31st March 2024. One of the main reasons for the sharp decline in occupancy rate for Alexandra Technopark is due to Google giving out part of the space there. While Google did indeed sign a 5-year lease for 344,000 square feet at Alexandra Technopark, they have actually left the office empty. This may be attributable to the staff layoff and hiring freeze for tech companies. Since Google already has 680,000 square feet of offices at Maple Tree Business City 2, there is a high likelihood that the occupancy for Alexandra Technopark may go down even further in the future. In addition, its commercial properties in UK and Australia are also not doing very well. During the last AGM, unit holders were extremely concerned about some of these investment properties for commercial real estates that seems to be in structural declining market, like in the UK itself. You can see that these business parks have very, very low occupancy. It's way below 90%. I am not a fan of office commercial REITs, as the current economic trend has shifted away from being physically in office due to the work from home and also flexible working hours that is extremely bad in US and now in European countries. Also in future for Singapore, we have this flexible working hours that is coming out. Do note that the current concentration of logistics and industrial properties in FLCT is around 70%, whereas the remaining 30% is made up of these business parks and offices. Okay, finally, let's look at my personal thoughts on why FLCT is a good buy. Reason number one is that FLCT has the lowest gearing ratio among the top 10 largest S-REITs by market capitalization. Its aggregate leverage ratio is only 32.7%, and this thus gave the management of FLCT a significant debt headroom of 851 million to do further M&A. Reason number two on why I think that FLCT is now a very good buy is that its new CEO, Ms. Anthea Lee, has indicated that it may also move into the acquisition of data centers. Anthea Lee was formerly the COO of Cable DC REIT. Based on Anthea's track record at Cable DC REIT, we can see that she has a very good growth mindset with lots of acquisition in her pocket. The third reason is that FLCT has a long-term plan to focus on further building out its logistics and industrial component, where it has always been doing very well. This is expected to boost the segment for logistics and industrial properties to 85% of the overall portfolio, while further reducing the weightage of its commercial properties to only 15%. The management of FLCT also did not rule out further divesting the commercial office properties when the time is right. Last but not least, the net tangible asset of FLCT as at 31st March 2024 is at $1.16 per unit, while its last trading price is at $0.955 per unit as at 14 June 2024. This represented a discount of 17.7% and a very attractive distribution yield of 7.28%. For a S-REIT that has one of the lowest gearing ratio. Summarizing, one has to weigh the advantages or the four upsides from these developments against the environment of high interest rate and also the probability of a recession. Okay, folks, that's all for today. Take care and may you be well and happy always. Bye.